Thank you very much for this nice introduction. Good afternoon, everyone. Some of you may know me already because I've already had the pleasure to attend previous SteelOrbis Fora and conferences. So I've been Director of Economic Studies at EUROFER, which is the European Association of Steel Producers, for 4 years. And today I will provide you with an overview of the most recent outlook for the European steel market as a whole. And yeah, it's a great pleasure for me to be here. Thank you again to the organizers. And it's also a pleasure to be in my home country, at least today, even though I have to admit that, frankly speaking, in Brussels, the weather was much nicer this morning when I took off. Anyway, so I will kick off my presentation with a macro overview, and then we will have a more detailed look at what's the weather like for the European steel industry. Rather stormy, I have to say. The sector is living quite difficult times, to say the least. But I will go through it in detail. The first section of my presentation briefly will touch upon the macro environment, which is obviously very important also for the steel industry, as for all manufacturing sectors in Europe, which have been suffering a lot in recent years. Real GDP growth in the EU has been positive also in 2023, but still rather weak, below 1%. Even though, let's say, the more optimistic, let's say, outlook of a so-called soft landing has materialized. What we mean by soft landing, we mean managing slowing inflation down, reducing inflation, which was a major issue in 2022 and also in 2023, without triggering any economic recession in Europe. This has proven successful. Europe has achieved growth in 2023, and will also achieve growth in 2024. But, however, there's a big exception here, which is Germany. As you all know, it's not a major dramatic recession, a tiny one, minus 0.1%, but still, it's big news when Germany has an economic contraction. And the overall outlook remains very, very uncertain. So we will have growth in 2024, 1% or around 1% according to our latest forecast and also according to the European Commission. But there are clouds on the horizon, particularly because economic growth has been primarily driven in recent years by services, whereas manufacturing sectors have been very, very weak, including the steel sector and also steel using sectors. We will see that later. And so this is a drag for economic growth in Europe. And Germany being the weakest economy, most exposed to the major external shocks which we had in recent years. But inflation, as I said, is the good news in the sense that it went down considerably from the record highs seen in 2022 and is set to reach 3% on average in 2024, and then to decrease to 2.6% in 2025. Still above the 2% target, but still on a decreasing trend. Yeah, as I said, we see economic growth in Europe still today, but growth is widely uneven across major euro area economies. You see there Italy, Germany, France, Spain, and the EU as a whole. And you see there that real GDP volumes have recovered up to pre-pandemic levels in recent quarters, but at quite a different speed across countries, across major euro area countries, with Spain performing even above the EU level, and Germany, France, and Italy lagging behind considerably with real GDP volumes which are below European volumes. So uneven GDP growth, weak manufacturing sector. This is another slide which provides evidence of that. This is a snapshot on the two major leading indicators for the manufacturing sector and the European economy as a whole. On the left-hand side, the Eurozone Manufacturing PMI Index, provided by Standard & Poor's, that has been in a contraction zone since July 2022, below the expansion level of 50 constantly, particularly in Germany and France, and in September has reached a 9-month low, which is around very low levels. And also overall economic confidence measured by the economic sentiment indicator remains at very low levels in historical terms. That's the macro environment. And then we ended up with inflation, which is relatively good news, at least, which, let's say, has eased considerably without paying the price of a real economic recession, of an economic pain across Europe, with the exception of Germany, as we saw. But inflation went from 12% in October 22 to 2.4% in August this year. September is not yet available, but for the euro area, inflation is available and went even below the 2% target, 1.8%. So we have successfully reduced inflation rate, and we foresee, as I said, a 3% level in 24 and a 2.6% in 25. Obviously, record high inflation, the highest over the last 35 years in Europe, has taken a toll on economic policy in general, as the ECB was bound to raise its policy rates several times, bringing them from 0 to 4.50%. But then recently, we've had 2 cuts in policy rates down to 3.50%, which, however, will trigger their positive effects on the overall economy and on manufacturing, albeit belatedly. You know that the transmission mechanism of policy rate cuts is a bit lagged. So it will take time before we will see effects on the real economy. And then we come to the industry. We go more in depth into the manufacturing sector and steel user sectors, which are important for the steel industry. The first slide is on two other industry indicators. The first one is the level of orders, the expectation of orders from 4 major steel using sectors in the EU: construction, metal goods, mechanical engineering, and automotive. And you see that orders have been decreasing sharply throughout 2023 and also in the first months of 2024, reflecting the outlook deterioration and the deteriorating market conditions. Particularly, automotive orders have been in negative territory, so you see below 0 since January 2023. And construction and metal goods have seen their orders in negative territory for more than a year. On the right-hand side, as a recap, you see the evolution of overall industrial production for the whole manufacturing sector in 4 major euro area economies and in the EU, which is very much in line with what we've seen earlier. The weakness of the manufacturing sector is a drag for the European economy, and industrial output remains below pre-pandemic levels still in Germany and Italy in particular. You see the red and the orange lines, whereas it has recovered up to pre-pandemic levels in Spain and in France and also in the entire EU. But in Germany and Italy, we have still weak manufacturing conditions. Also, industrial production has been decreasing over the last 4 quarters. So, still weak manufacturing conditions, and there are obviously repercussions also on the activity and on the output which is produced by the most important steel using sectors, which actually are the bulk of steel demand in the EU. So that's exactly what steel demand comes from. So if we measure the output from these steel using sectors, we see construction, mechanical engineering, automotive, and also metal goods and domestic appliances. We see the evolution of output in terms of year-on-year growth rates in quarterly terms. You see there the growth has been slowing down or going even down to negative territory since Q2 2022, after showing some resilience in early 2022, despite the outbreak of the war in Ukraine, and also despite the outbreak of the rising energy prices in the summer of 2022. But then, obviously, this has impacted steel using sector's output considerably. And then, first consequence, construction sector, which is the most important steel user sector. It accounts for 35% of apparent steel consumption. It fell into negative territory already in Q3 2022, and then has recorded 7 consecutive quarterly drops. Last was minus 2.3% in Q1 24. All sectors have recorded contraction in output in Q1 2024. And interestingly, automotive, which you see there, the red line with the very, very sharp, the sharpest rebound after COVID during 2021, automotive had rebounded quite strongly in the previous 7 quarters. But then in Q1 has gone into negative territory as the others. And also, if you look at absolute output volumes, these are still far below pre-pandemic ones. So very much still below the levels seen in 2019, which means that the automotive output is still low historically, which mirrors obviously weak demand. You all know the latest figures on the sale on car sales, passenger car sales in Europe. Demand is still very depressed due to uncertainty over EVs implementation and related facilities and recharging points and so forth. So this is the evolution of CGD sector, which we translate into annual output figures with our latest prediction for 2024, which we have released in July. By the way, we are working on our next quarterly economic and market outlook with new forecast for CGD sectors, and also we will see that for apparent steel consumption, which will be released very shortly. But these are the last figures which more or less give a signal of the trends which are ongoing for major CGD sectors. So construction has been in a recession in 2023 and will also see a contraction in output in 2024 due to, which will be more intense than in 2023 due to the protracted impact of higher interest rates on mortgage loans, which has obviously impacted housing demand. Despite the recent cuts in policy rates, but then obviously the rise in mortgage interest rates of the previous months has impacted a lot the construction sector. And also in relation to civil engineering, let's say the economic contribution of spending in civil engineering has decreased due to, let's say, due to stricter limits to budgetary spending in many member states. And the second most important CGD sector, which is automotive, accounting for 18% of apparent steel consumption, has, you see there, recorded 3 consecutive years of growth, but with output remaining below the levels seen before the pandemic. And then we will eventually fall by 3% in 2024 as the automotive market has entered a more acute and more pronounced phase of recession due to uncertainties both on the producer and on the consumer side. And in last thing, the overall SWIP, which is the steel weight in industrial production, had proven very resilient in 2022, despite the outbreak of a war in Ukraine and the unprecedented energy crisis in the summer of 2022. So recorded a growth of 3.2%, then slowed down to only 1.2% in 2023, thanks to positive performance of automotive and mechanical engineering, but then will drop by 1.6% in 2024. So that's the overview for CGD sectors where demand comes from, and then we come to the outlook for the steel sector as a whole for the entire EU. We begin with the supply side. This is just a very simple but I think very meaningful snapshot on the evolution of crude steel production in the EU. You see there since 2008, before the great financial crisis of 2009. So we are, in 2023, we had a second consecutive contraction in steel production, -7%. And in 2022, the contraction was bigger, was -11% due to the very, very strong impact of the energy shock on production costs, which was really very, very powerful. But then also in 2023, we had a reduction in steel production. In 2024, we should have some rebound, but we will still remain very much below 2019 levels with 134 million tons. And overall, if you look at the levels that were seen in 2008, we are something like 58 million tons below the levels which were seen before the great financial crisis. So this is a measure of the decline which we've seen over the long term in steel production in Europe. Then we come to the demand side. This is purely the evolution in volumes in quarterly terms of apparent steel consumption. You know, apparent steel consumption is consumption which is not yet adjusted by the evolution of stocks. Very simply, you see there a clear decline since Q1 2022 when the manufacturing downturn and the deterioration of demand have impacted, obviously, also steel demand. And then it has intensified at the end of 2022 with the second lowest level on record in apparent consumption, which we've seen in Q4 22. Then has stabilized somewhat, but still on a year-on-year basis, we have seen a 3% drop in Q1 2024. And market conditions are expected, hopefully, to improve somewhat in the first half of 2025, but however, the outlook remains still very uncertain and I would say quite unpredictable. But so far, we don't see any clear signal that the market conditions in terms of demand will improve very shortly. And then this is just an expansion of what was seen in the previous slide. This is the evolution of apparent steel consumption on a quarterly basis in terms of year-on-year growth rates. You see there the very strong rebound during 2021 and then the several drops in demand in 2022 and 2023. And also we have introduced here the evolution of imports from all third countries. Obviously, imports have been mirroring broadly the evolution of demand, but in some cases, you see their imports have increased at a higher rate than apparent steel consumption. And this has had some important consequences for the European steel market because in the end, overall, over the entire 2023 and also in Q1 2024, the share of all imports from third countries out of apparent steel consumption has reached 27%, which is the highest ever recorded. In annual terms, apparent steel consumption in the EU has recorded a recession over 4 years out of the last 5 years. So in 2019, 2020, in 2022 and in 2023, particularly severe were the recessions in 22 and 23, minus 8.3% and minus 9%. Our latest outlook, which has been released in July, sees a very, very modest, a tiny rebound of just 1.4% in 24, which is most likely to be revised downwards with the next report, which will be released in October, so shortly, which will be followed by a more robust rebound, 4% in 2025. However, this will translate still in some 12 million tons below pre-pandemic levels. So that's where we are. And then as a result of the increasing market share held by imports on total steel demand, the trade balance for the EU in relation to steel products has been deteriorating sharply. So we've seen 7 consecutive years of deficit for finished steel products. That's what we're talking about here. And this deficit has been widening, particularly between 2021 and 2023. It has narrowed slightly in 2023, but it has reached 12 million tons in 2022. So the EU is becoming maybe structurally a net importer of steel from the rest of the world. And these are my conclusions, which I won't repeat what I already mentioned in my slides. I hope it was clear. So I don't have any major message to convey to you, but yeah, the only thing is that the weakness of the manufacturing sector is expected to continue. We don't see any real improvement despite the monetary easing, despite some possible rebound in economic and manufacturing activity in first half of 2025. Biggest euro area economies, Germany and Italy in particular, still see very weak manufacturing conditions, and also, which matters very much, we all know sadly, ongoing global geopolitical tensions are not helping the outlook in this respect. Demand is expected to recover somewhat in first half of 2025, but with a very high level of uncertainty. Two major points that I would like to make before concluding have to do with something which is more, let's say, longer-term trend. What we've seen here was more a short-term outlook, also taking into account the impact of many external shocks we've had in recent years, the rise in energy prices, so the energy shock, the war in Ukraine, geopolitical tensions, etc. But as you've seen in the previous slides, declining demand and particularly in production began before these multiple external shocks. So it's something which is probably more structural and which is worrying in a way. And the second point that I would like to make is that another major threat for the European steel industry, coupled with the increasing share of imports within the European market, is the issue of global excess capacity, which is increasing worldwide. Global excess capacity is something which has reached unprecedented levels. The OECD estimates something between 600 and 650 million tons globally. And this is also something which is very worrying and should be addressed, but this is something which is something to be discussed at the political level, not from me, at least. So yeah, that's the outlook for Europe, and thank you very much to all of you. Thank you.
Thank you so much for the detailed presentation, as always. Very interesting to listen, and for the data. Do we have any questions from the floor? I actually have one. You partly commented on that at the end of your speech. With the overcapacity and upcoming capacity, particularly for the hot roll coils, we are expecting some already happening across Asia and also in Algeria. And we expect that European market will be among the ones targeted. So how do you think it will impact generally on the currently already difficult import situation in Europe? And do you expect some measures to be taken?
No, I cannot say anything about possible measures. What we see is that I mean, I have used the word global because it's really global. I mean, obviously it concerns us particularly, but it's not only Europe which is concerned. It's not only European steel sector which is at stake. The problem of overcapacity is something which is a problem which is felt also across, for example, Far Eastern countries. It's a global problem. The OECD has set up a specific working group to tackle this problem. Yeah, and also, yeah, it's something which we monitor, but we see that obviously global excess capacity is already resulting in more import flows towards open markets, and the EU remains an open market compared to others. So yeah, that's where we stand. So
I see. Thank you so much. Thank you so much again for the presentation.